So what could happen now, or what we think could happen now, is that if the Fed does not move reasonably quickly, and they meet October 30th, we think they'll lower rates again, but they tend to be dragging their feet a lot. And if they keep on doing that, and then you get into a really slow period, then your rates are going to probably go down to zero rate. What I told you was the overnight rate now is about 2%, but it fluctuates between 1 3/4 and 2, but they're way out of line on it. So for us, we're thinking that if you have a slowdown at all in the first or second quarter next year, that they'll take these down to zero. I think that the government would do some fiscal policy implementation before they would go to negative rates. In my opinion, I don't know what they would do. Regardless of politics, I don't think it makes any difference who's in. When you get to that point, what they're going to do is flood the market with some sort of liquidity or try to do it that way. And maybe they end up at a negative rate. I really don't think they will. I hope they don't for sure. But the problem for investors in this room is you can't bet everything on the fact that they may not. So you have to have something, even if you're a big stock, all stock, okay? You probably ought to have something that pays you some sort of interest rate on a lock-in, more than just day to day or month to month. And that's where we're coming from. If somebody came in with brand new money today for us in our income strategies, part of that account would be in 20 to 30-year paper. And I know it sounds, for people that have been around a long time, and most of you have, you can remember the 14 or 15% treasury in 1981, 80, 81. It's really hard for you to do mentally, but if you stop and do the math on it, it makes sense. But if you didn't have anything long term, you ought to have something.